So once again, today we will discuss some stocks of the last week and the one setting up long. Mostly this is discussion of the last week setup. I showed you and what happened, I'll discuss with you. And today I added some more slides about swing trading is about. People ask me question, what is swing trading? They understand day trading, they understand investment, investing, etc. What is swing? So when I tell them swing, then they ask me, all right, so okay, so the agenda is analyzing last week's and coming week's stocks, and at the end, during last session, explained the market has bottomed on Friday. Actually, it bottomed, for me, it bottomed, gave me the clue 2 days back. Some stocks moving early on, and those were the stocks which kept on going after Friday move also on Friday and afterwards. I showed you the chart of X, how it formed a hammer, and doing now. Now I'm reading newsletter that the X is setting up for long, etc. X set up long last week ago. My members in end of day service, they made a killing. So ask them about it. Anyway, I'll show you the chart again. So I'll show you the charts of the markets. It is going up. Market has bottomed on Friday. So market is going back up. Market probably will make the new high soon. So watch for that. S&P target is 3,100. So I'll talk to you more about markets at the end. I'll show you the 4 charts as I show you. So in trading, we need to understand how professionals make money in the stock market. So when they can come, they can run, but they cannot hide their footprints like dinosaurs. So somebody, when I was learning, my mentor, the chief, God bless him, he told me that the Noshi look for the dinosaurs, his footprints he can hide, but he can footprints. So learn to those footprints. So I try to show you those footprints, and in my 6-month coaching program, I will show you in more detail. This is just a preview of what I show you. So just don't think that this is it. This is what it is. If you know, if you're a master, is fine. If you want to learn in detail, then join my 6-month coaching program. You just send me email, and I will send you the details. So I strongly believe in Bruce Lee's quote. As he said, I fear not the man who has practiced 10,000 kicks, practice one kick 10,000 times. So that is what you need to do. You just practice 1 or 2 or 3 kicks, but 10,000 times. So 10,000 times, he's saying it. The experts say that you need at least 10,000 hours to master anything, or to not master, but to get a grip. So or you go to be a doctor or surgeon or a pilot, you just everybody requires you to 10,000 hours. I put some hours, and I have some money, I'm opening an account, and I want to trade. So they don't have any experience. I was like that, and I started trading when I didn't have not even a 1 hour experience. And in my first trade, I made $70. That trade was Joe, and I made $70. I gave $30 commission to Option Express. $40 was my profit, and I thought I know about trading. I didn't know anything. Within a month, I wiped out my account of $2,000. So 10,000 hours is a minimum requirement. I believe it's 20,000 hours in trading. That's when you understand what's going on in the market. So, and also master the few techniques which produces high and fast return. You have to master all the techniques and learn about all the markets. You can learn, but you don't trade. You just focus on your basket of a stock, how the stocks move. So just think of them as a money-making machine, as an ATM, as your core products which just keep giving you money. So if you master, like, let's say 100 stocks or 60 stocks, just trade them. When they move, you know how they're moving, you cash and make money. So don't have to run around and, one day you're buying penny stocks, another day you're buying $100 stocks. Those stocks which just comes on the news. You may get lucky, but eventually everything gets wiped out. So what is swing trading? So swing trading is a combination of two concepts. It's a slower pace of investing and quicker pace of day trading. So it's in between investing and day trading. So swing trading is anywhere where you hold your position from 1 day to 7 day. In day trading, you have to be cashing out, close at the end of the day. And investing is a long term. There's something called position trading also, where you hold for like 1 month, 2 months, 3 months. The swing trading ideally is when you hold from 1 day to 7 days. So 1 day to 7 days, you hold the trade. You're looking for that swing, meaning that move, 2-3 days of move, and then you're exiting it. Sometimes you get the higher move, 5, 6, 7. Sometimes the move comes in just 1 day, one big move in next day, and you're out. Sometimes the trade goes 14 days, or it's just not going anywhere. It's not giving you. It's just dwindling. It's on the side, sideways. So it goes on the sideways pattern. So the swing trading becomes like a position trading. Other than that, ideally, the swing trading is you get in and get out within 7 days. So when you are getting in and getting out, your return is faster. So 3 to 5% move you're looking for. And the objective of swing option trading, options trading, is maximize profit in short period of time. So you're maximizing profit in short period of time. You're getting in, getting out. So 3 to 5% move in the stocks, and at the same time you're minimizing the downside risk. So you know where you could go wrong, and you exit there and you get into something else. So 3 to 5% return in stocks. So, or they even say 5 to 10%. But for me, if I wait for 5 to 10% return in option, it becomes it is kind of long duration. I may give up some profits, and then it goes back to 5%, 10%. So for me, I look at 5% quick move. If it comes quick, and that 3 to 5% return in stock move becomes a return of 40 to 100% in option. So the stock moves 3 to 5%, your return is 40, 60%, even 80, 100%. It depends how fast the stock moves. If it moves the next day, the return is higher on option trading. If it moves the same distance, the return is lower because of the time decay kicks in option. So that's the advantage of swing trading. I do both. So I do stocks and swing trading in options. So I have a different portfolio. I don't mix. Like I used to mix. I had a same one portfolio where I was trading stocks and I was trading option. So I did not have a grip on it. I was mixing it. Sometimes I was overdoing the option trading, where I was supposed to do the stock trade, investing in the stock for swing trading. So I said, okay, I need to separate my account. So account is separate for stock trading, and account is separate for option trading. So swing, I have a bigger portfolio, whereas in option trading, the portfolio is a smaller size. I may go cash in stock trading because the spread is low. So sometimes I liquidate all my position when I see extreme profit in the stock portfolio. I cash out, because when I see extreme profit in the stocks move, the return, the stocks move down, and then I lose some profit. I cash out, get back in later. One by one, I build my portfolio. Usually this happens early morning. If I am holding overnight, it happens early mornings. The surge in the market, suppose market is bullish, the stocks are moving, and I'm lucky I have a positions, and positions are moving. Like suppose 4 or 5 positions I have, and they are moving. So I can see this is the extreme profit right now. I need to take it. So I take those profits, irrespective of individual trades. unless there is one which is moving very aggressively. So I leave that alone. I close that, and then I rebuild my portfolio back 1 hour. So 5 to 10% in stock trading can give you 100% return in option. So there's a combination of option. And for swing trader tool, the swing, these are the tools for swing trader. You don't need a perfect indicator. I show you again and again via chart that you don't need an indicator. People fine tune. No, in the beginning, I used to have MACD, RSI, ADX, DMI, Arun. I set up the combination of these indicators. I even wrote a blog how I use it. They work, and I will look into those and teach you. I can teach you that how I was using ADX and DMI, positive, negative, etc. But then I learned to use the pure price. So the stock charts are made up of price, right? The candles, the bar charts, they are made up of price. So if you can understand those price and then just mix it with the volume, that's it. All indicators are price and volume. So you don't need perfect indicator. You just need to learn to identify proven pattern, the pattern which works in the past, which will work in the future for you, and which produces quick and fast return. And then you execute same techniques daily. Use your judgment. So when you learn every day, you are in the market. You have your trust in yourself. You take your decision quickly. You are confident. Then you have a better judgment. You have your skills. You develop your expertise, and you are flexible. So this is very important. You need to be flexible according to the market, what the market is doing, and you adopt your strategy accordingly based on the market conditions. So understanding the market, you are flexible, and you need to really understand broader markets and indices. Sometimes we get caught up in the market which is moving against us. So you have to really understand what is going on. Is it really going to kill you, and you close the your long positions, or the support is just around the corner. If the support is just around the corner, market is coming down against you, you know that, okay, if you withstand this, either you exit right away when you spot that move against you, or if you're holding it, then you need to know really where you have to liquidate your position, where is the support, and what the market can do. So, and when the market does it, you know that this is it. Now you're safe, and always stack your probability in your favor. So when the trade comes in my attention in the morning, suppose, or during the daytime, I just look at it and I say, okay, is the probability in my favor? There's a stock going to do its thing. What is the probability? So if the probability is higher, suppose for long, I go long. If the probability is that it will is going to go down, then I go short. So you need to stack the probability in your favor and just trade accordingly. Then you leave it, let the trade work. So uniqueness of the swing trading. So the swing trading, the easiest trade comes before crowd notices. So if you can prepare your stocks and be ready for it, and then when the trade comes and you spot it right away and you get in, and ideally after you get in, that's when the stock should move. Next day or 2 days later, that's where the people are coming in and buying it, because the news is out, the major news is out, and that's why the stock is moving. But the big boys, they bought the stock, they already know the news. So when the market was crashing, like last week or so, before that, why they were buying X? So I showed you the chart. So they were buying X. Okay, we know about the infrastructure, etc. But but they were buying it, and it showed on the chart. So you don't need to know, okay, the $1 trillion infrastructure will come or what. You just take your decision based on that chart. So suppose, let's say, when I was traveling 5 countries in November, December, and I traded from there. Nobody noticed that I'm trading from there because I was trading. I was just performing my duties and I was trading. So over there in jungle by the river, I didn't have CNBC. I was not reading any news, and I was so relaxed. So, but I was still trading. So how come I was able to trade, but just by looking at the chart? So just assume that one day you just turn off CNBC. I keep it under mute, and I don't I not under mute, as it very low volume, so it doesn't disturb me. Really, it disturbs me after 6:30 when the market opens. So before market opens, I listen to all that, and before market, I just turn it down. So just imagine you don't have any news in your disposal. So how are you going to trade? Just by looking at the chart. And you should be able to trade anywhere with your laptop. Mobile phone is too little. I won't be able to trade for sure. Maybe one day, but at least you should be able to open your laptop, have internet, and you should be able to trade, not fully, but survive and trade. So I had 2 laptops and 1 monitor I bought there. I didn't have to take the monitor. I just bought it there. I walked in. I asked my friend, okay, take me to your biggest tech store. So they took me to the tech store, and I went there. I said, which one is your best monitor? They showed me that monitor, and I said, okay, give it to me. I bought it, and I went, hooked it up. So I had 3 screens. That was enough for me. So now I'm computer over there with 7, 8 monitors set up, and and I will leave it there. I'm going there again to teach, and I'm just building my. I went there again, and I said, okay, I want to build the desktop with this configuration. Can you build me? They said yes. So it is exactly like what I will buy here. They can assemble me over there, and the monitors they have to order. So anyway, so you should be able to, without looking any news or anybody telling you. And easiest trade comes before crowd notices. And you learn to take singles, not home runs. People send me email. They say they give up all the profits. They make too much money, and then after a few days, all their gains are gone because they don't take the profits in single, and home run will take care of losses. Sometimes you will hit a home. So that will take care of 2 3 losers. Otherwise, just rely on singles, and should have a smooth and rising equity curve. So a smooth and rising equity curve, not on a daily basis is hard, but at least on a weekly basis, your equity curve should be stable and going higher, and definitely on a month. So that is swing trading. So our swing trading is, we provide real-time trade. We provide you exact buy price. We provide you 3 targets, technical analysis via charts. I'm showing you on a webinar. I post it on a Facebook group. If you're a Facebook group member, I post every day 2 3 charts over there. Provide you continuous education. I'm giving you webinar right now. I have a Facebook group. You're welcome to join. If you don't know what it is, just send me email. And you get also 85-page trading system guidebook. So that's the features of option trading. And there's no shortage. So there's no shortage of trade and knowledge. And this is what our clients are saying. So this is just received last week. Every week, every day, we receive a lot of testimonials. So this is the last week. Some clients sent us the testimonials, so I wrote it down here. These are other testimonials. Anyway, so these are the 3 strategies. These 3 main. I'll explain to you about the gap, how I trade, and then I will show you on the via charts. So the breakout strategy, where the stocks are breaking out, either breaking the resistance or breaking out to a new high. So whatever it is, the breakout is powerful, and the stocks is moving aggressively. So if you can spot the move before the breakout or right at the breakout time, you can make money, decent profit, 3 to 5% in a stock, and option could be 40-60%. Reversal, where the stocks comes down to some support level and then it reverses upward and furiously is going up. So that's breakout reversal. Opening range breakout, I have 6 stocks in my portfolio. So, and I filter them based on certain criteria like average volume, optionable, their ATR, beta level. There are some other criteria and I filter them. So I made a basket of 603 stocks. So it's not easy to monitor all 603 stocks in the morning, which one going up, which one going higher. So I filter, 5-minute filter. There are 3 filters. So I put a filter 5-minute. So any stock intraday after 5 minutes is going higher, it shows up on my screen. So, and the same way going down. So both ways. So I know that these are the stocks still moving up after 5 minutes. So these are the stock which I need to pay attention. And if one of those stock is in my portfolio already, I pay attention to that because it may run up and then come down, pull back, and I will give up the profit. So I have to be careful. So I watch those stocks. Then there's another window of 15-minute filter. So as soon as the 15-minute passes, some stocks move to that window. And I can see, okay, out of those 5-6 stocks, now there are 3 stocks which are still moving after 5 minutes, moving higher. So there are buyers there. And then there's another window of 30-minute. So after 30-minute, usually the news are out, and if the stock is still moving, then that's worth considering. And I look at that stock. So in this way, the stock is moving smoothly from 5-minute to 15-minute to 30-minute. Both I have 6 filters for down and up, and then at the end, after 30 minutes is passed, then I put it at the 60-minute interval, and I say, okay, anything which goes above 60 minutes, then I will look into it later. So that's opening range breakout. So, and then you combine it with your entry. So those stocks which are still moving after 30, and you have to identify the support levels, the pullback level, and then see if the stock is holding the full support, and then you get back in intraday. So, and there are 4 other techniques or strategies, you can say. My favorite one is gap down reversal. I'll explain. So the gap up, the stocks are gapping up. So the gap up I prefer is when the stock gaps up from the consolidation range. So the stock has been moving sideways for a few days or a week or 2, and suddenly it gaps up. So if it gaps above that resistance, the stock is telling you that now I want to move, I want to run. So that is the stock you need to pay attention. The one which gap up from the consolidation range. So the stock is consolidating at the bottom, going up and down, up and down, up and down, doing nothing, and suddenly it gaps up. So that's one stock you need to monitor for gap up. And the other gap is the stock is already trending higher, and then it gaps up. So when it gaps up, where it gapped up, does it have a resistance upward? Did it gap up below resistance, above resistance? And when it gapped up above resistance, how much above it? So you have to identify all that, because if it gaps above a lot, when it can pull back, and when you enter it, you can lose. So it happens. So be careful with the gap, but try to trade in the direction of the gap, not against the direction of the gap. That's the chances of low chances of losing money. Where the professionals, they come in, gap up reversal, when the stock gaps up, they try to fade the gap. So if they are expert, they can do it, but you prefer that when the stock gaps up, comes down to a certain level, and then you time your entry and go to the gap direction. The other one is gap down. Some stock gap down due to some bad news, and they already bottomed during pre-market, after market hours. and usually when they gap down, that's it. Um, they just stabilize. So be very careful with the gap down stocks. They unless you if you don't know what happened during pre-market hours, in the gap down right at the time when the stock is about to reverse or the move is already over, so you are getting in late. So if you're shorting it or you buying puts, it's not going anywhere. So sometimes you may get lucky just because the stock is just keeps going down. So that doesn't mean that you always buy puts or short the stocks when the stock is gapping down. The last one is gap down reversal. So when the stock gaps down, so the stock gaps down during pre-market hour, is already gapping down. There's some news, and then the regular session open, the stocks gaps down right in front of you. So if you don't know what happened during pre-market hours, you don't know the low it made. So and the stock gaps down. So if you go short or buy puts, so, and you get caught because the low has already been formed in the pre-market hour. Now, during regular sessions, the buyers are looking to buy. They think it's a good value, or there's some support, or it's a 200-day moving average, or 50-day moving average, something there which you are not aware of, and they come and buy fast and furious. Initially, for 5 minutes, the stock is going down, so you think trade and you go short or buy puts, but as soon as you buy, within 5 minutes the stock reverses. That's it. That's the low. So that was not the low. The low was already in pre-market. So that was a higher low. So, and you didn't know about it. So it was a higher low, and the stock gaps up, and boom, 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 boom. It keeps going fast and furious. The longer you wait, the more you lose. And other traders are also doing that, losing it, and then they recover. The new buyers come in, and they buy. Those who shorted, they realize their mistake, they cover their shorts, and in order to recover their loss, they go long. So they double up. So they shorted 100 stocks, they go long 200. So all up, and the stock takes off to the upside. So if you can spot that, you go long, you buy calls. But then again, you need to be careful of identifying the resistance level, because intraday the stock can hit, after gapping down it goes up and hit some certain resistance, and then it subsides. That's it, the move is over. Then you have to wait for a few days for further move up. Sometimes the stock just keeps going up, so you're lucky. So that's gap down reversal. So I prefer gap down reversal, and I prefer gap up. So these are the two strategies I use often. I don't fade gap up unless I'm sure, and I don't go short unless I'm sure that the stock is going down further. So we have a 2 weeks trial if you want. If you're not a member of Swing Service and you have never taken a trial, you can send us email for $17 and you can try out for $17. And I also have a 6-month coaching program. Send me email and we will talk about it. Okay, so here's the AMAT chart. And I showed you, I don't know if I showed you the chart. So AMAT is really bullish, and this is one aggressive entry is showed here, and this is the second aggressive entry right here at 50 and above. So I drew this support line from both sides, and you see this hammer. So AMAT dropped, and then it bottomed right here and formed the hammer. So not only the hammer is formed, but it closed above the midpoint of this candle. So when it closed above the midpoint of the candle, it is an aggressive entry. So if you are long, if you want to go long, you can go long on this. But if you want to wait, then you wait for one more candles to cross. And this is where the AMAT has given the second entry 50 and above. And since then it's moving up. So I prepared chart on 16th of February, Friday, and here's the resistance, 57.58. So if 57.58 crosses, AMAT will make a new high. So here is the top, and here's the bottom, and AMAT is supposed to make a new high, and it will make a new high. Only temporarily you will see some hesitation here because those who bought it here. So hesitation always comes by those who have bought previously and now they are in a break-even situation. So when they are break-even situation, they want to sell. and those who bought at this level, they are also aware of this level, right? So they will take profit. That's one thing. They know that sellers will come, and those who bought here, they will take sell because they want to go into break even. So there are two things happening. So that's where the seller, the sell pressure comes in. Two things: so the buyers here and the buyers here. When you combine, the selling pressure builds up here. But then when the selling pressure subsides, either the stock takes off, or if the selling pressure is too high, the stocks severely pull back. So what happened is it tells us here what's going to happen. So if you are if you don't want to take any risk, you just exit here and see what it does, and then you get back in. So that's what I do mostly. I get in and get out, then I enter again. I say, okay, I need to enter again. So I don't want to wait around here and see, unless it pushes intraday, boom, 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 it keeps a big wall broken. So if the wall is broken, then I need to hold. If the wall is like little balls are hitting the wall will probably not break. But if the big iron ball is hitting the wall is going to break and the stock is going higher. So it depends what kind of is hitting the wall. This is a snap. I did not trade a snap. I never bought a snap. Earning gap. So it came up with the good earnings, and then this is the gap up. So this gap, unless you are in the trade, some earning will be good. You take profit on the gap up. This is too big of a gap. Gap will be filled, and then see, you see it pulled back. It pulled back. So suppose you were in here, you got out here. But if you're not inside here, then you have to just wait for the pullback. So pullback is happening. There is no entry, and this is the entry here. This big candle. So this is again telling you, okay, I want to go up. But again, some people bought it here, right? So some people bought at right here 2050. So they are the one who want to sell after this pullback to 18. So they bought at 2050, 21. They saw the stock pulling back to 18. They of their investment, and now they're seeing it break even. So they want to get out of 21. So there is some selling pressure here. It will come, and then if it breaks, then it's going higher and higher. So snap, watch for 21 break. This one is ROKU. So my ROKU target, I've given 75. Unfortunately, it did nothing during this period. It went on a sideway, but ROKU has taken out the resistance and is going higher. So the sellers are sitting here. So the sellers are always, think about it, those people who bought here, they are the one who are the sellers. So these people who bought at 57, 50, 58, they are all sellers because they saw their stock going to 49, 39, 40, right? So from 57, they saw it to 39. Now when it comes back to 57, 58, they will say, okay, I'm lucky, I got out at break even. Phew, they will get out. So there will be some hesitation, and then ROKU will break up and go higher. So what you do, you can, I did not draw the horizontal line. I can draw this one line from here all the way here to on the right, and a parallel line from this 40 horizontal line. I can draw another parallel line here, and it comes to 57.50, right? So once it breaks, the stock is going higher. So how much going higher? You see this here, 43 level, 43 to 57 is $14. So for 57 to 43, the distance is $14. So you add that $14 from 57, which comes to what? 71 target. So ROKU, if it breaks 57.50, can eventually go to 71 target. So keep an eye on ROKU. Disney. So Disney fell big time. And again, Disney formed this hammer right here. And on the sideways, it's I mean, after forming hammer, so the aggressive traders were long here. Aggressive traders, The hammer is formed because of the aggressiveness of buyers, because I mean, that's where you have to assume. So hammers are formed when the buyers are aggressive. They fought the battle with sellers and they won the battle. So who will win the next battle depends, but it's usually the buyers will win the battle. The bulls will win the battle. So what was happening after this fall? Disney was falling, right? So assume or look, think of this candle, it's going down, it's like a red candle, so it's right here near 100, and then the buyers came in and pulled the stock up all the way, and that's why you see this hammer. So the buyers fought with the sellers and they won. They brought the stock back to 103. Then for next 3 days they're still winning, right? 103, 104. So it's still going up. So these guys who bought, they are still buying it. Others are buying it. So Disney is going back. Where is going up is 109. So Disney is going up. EDU again is it fell at the support. So I drew the support line. Support line, a valid support line is where most of the candles are touching previously, so bouncing upward. So this is a strong support, 8250, and EDU since then has been going up. So right now it's facing 50-day moving average. Once it breaks, the EDU is going higher. Same with BX. BX is facing the resistance line. Again, it bounced off 200-day moving average. So you see, this hammer was formed, and then again it tested. So they held, they came back. So it's like auto trading. Auto trading happens. They program it, buy it. Look at this candle. Auto trading, hammer, and then the stock went up. So once it breaks 34, 35 level, the EDU is going higher. This is Comcast. So Comcast, this is the chart of the Comcast from the day of when the I think when the market was bottom, right? So this is the Comcast chart. Again, hammer. It showed that Comcast wants to go up. I think I a previous chart on last Sunday, and since then Comcast is going up. So again, it's forming hammer and upward candles. So Comcast bottom at 37.50 and it's going up, going towards 42. Another one, Delta Airlines were in trouble. They were all going down. Now you see they are going, Delta again formed the hammer, and since then is going up. So when the stock formed the hammer and is going up, the chances are that it will go up. What is the probability that it will go up? It's higher rather than going down. So Delta is going higher. Another one, Walgreen. So we traded puts on Walgreen and we made good money on it. We bought it based on the news from Amazon that they are getting into, and we bought puts on Walgreen and CVS. Now the Walgreen is formed the hammer right here, you see. So whenever the hammer is formed, the puts or short trade is over. So think about this. Suppose you are shorting Walgreen here. When you are seeing this hammer candle, the trade is over. Now there are no more sellers, only the buyers. So once this resistance, $70 resistance is taken out, the Walgreen will go higher. Yeah, okay, so this was the 15th of February, this is 16th. So you see, Walgreen went higher on 16th of Friday. So it went higher further, right? So Walgreen is long, and 73 is the resistance and 75 is the resistance. So depends what it does. Probably this will not be much, but we know that this area of 73 is the resistance. There are sellers sitting here. They shorted here. They may come back. So you just be careful at 73, otherwise it's going up. So entry came at this hammer, and since then Walgreen is going up. So you can trade both ways in swing trading. You went short, then you went up. So this is the beauty of swing trading. You go short, then you go long. Same stock, doesn't matter. It gives you money. Again is AABA. This one again, this is another hammer. You see hammer, tiny hammer, again giving you the entry that I want to go long. Trader went long on this. If you are not aggressive, you wait for this kind of candle. It's going up. So Alibaba is going up. So watch this stock. Another one, UPS. So UPS crash. You see how it crashed? It came down. Now UPS. So then it gapped up here. So this is another one entry, aggressive, that it gapped up. Why did it gap up? If you are not sure about it, okay, it could be fake. It may come down. But if UPS breaks this one, going higher. So this candle is telling me, these two candles telling me the UPS wants to go higher, because they are holding the support at 105. So your first stop is 105. This is your eventual stop. This is your stop around 102, 103, 104 level. So UPS going higher after falling down. Another one is UTX. I prepared chart on 12th of February. So UTX trying to break. When I prepared, I saw this UTX breaking this resistance line. So I said, okay, I need to go long. So I sent alert to members to go long, and this is what happened. After it broke the line, it gapped up. So when it gapped up, we exited. It gapped up right at 50-day moving average. So our swing trading objective is over. That was the objective. We logged our profit. So it's good profit right here. So when you see a gap and the stock, you're in a position, you just take your profit and time your entry later. This is Amgen. So Amgen, we time our entry based on this candle. So Amgen gave this. So, and you don't need any indicator. I keep showing you don't need any indicator or tell you, okay, what you should be doing and what you should not be doing. When you look at this chart and you say, okay, I'm going long, you don't have to wait. You just don't say, I will wait or I will watch. No, you see this hammer candle, you say to yourself, okay, I saw a hammer candle. Now she said hammer candle is a buyer. So it is going long. And if it doesn't go up, get out at break of the hammer. So that's my rule. So when you see this rule, you apply, you say, okay, I want to buy hammer, buy a stock with the hammer. You can just master one techniques, hammer. That's it. So when I saw this, I said, okay, I need to watch. So I kept on watching, and on a search, I bought Amgen calls, send the alert, buy Amgens, I bought shares, and you see Amgen what is doing. 15th of February, look what happened. Yeah, how the trade build up. There's no magic. It's caveman trading. BIDU. So BIDU chart. BIDU gapped up. So again, it went formed the hammer right at the support, and especially when the hammer is formed right at the support level, that's where you have to say, okay, so hammer formed at the support level. So I know the hammer forms tells me the buyer coming in, and I see the support level. So there are two things happening: the support level and the hammer is getting formed. So when two things are combined, I better get in. So BIDU was giving entry here, but if you missed it here, then it gapped up. Then here, if you don't wait for the pullback, and it's going up. There's another chart of CSA, another hammer. See, strong hammer is going up. After forming, it just keeps going up. So as soon as you see this kind of candle, you just go long. So you don't trade anything, just trade these. When you spot, you put some money into it. This is MGM. I saw MGM. So I saw MGM and Win at the same day. So when 2 or 3 stocks on the same category are going up, there's something going on with that industry. So now you have to choose. If you see both stocks, you can buy both stock, or you choose the one which you think you will make faster money. So I chose Win. We went long on Win and made money. But MGM was also going up. So you see this bullish candle. This is the strongest bull candle you can see when there is no lower wick or higher wick. This is a super bullish candle. So when you see this kind, you go long. UTX came back. Okay, so there's repetition. I showed you the UTX chart. BABA. So BABA chart was prepared on 13th of February. Again, this is a hammer, and the BABA is expected to go up. Let me see what I did. Yeah, so it's poking its nose on. See, okay, let me go back. So BABA forms a short sign here at 170 that it wants to go up. So you could go long on this candle or this. If it's not, then wait, and it's poking its nose above this 50-day moving average. When it crosses, then BABA going up. Again, Home Depot is also showing the sign of recovery. So this candle is forming a hammer. It's prepared on 9th of February. Let me see what happened. I didn't check. Okay, so after this hammer is still sitting at the support. So Home Depot, it still has to wait. You still have chance to for you to go long. And when you see a bullish move, you go. No, this is the level where support is around 180 or 179. So 180, 179, Home Depot wants to go up. Oh, it already, so 187 is sitting at 187. I was looking at the previous day chart. So you still have dollars left, because Home Depot can come into this area. Once it crosses 191, it will go into this area. The actual buyers came at this level, at this candle. These were the buyers. Caterpillar. So I simply time my entry. You see this hammer formed, and then there's a double test. Whenever there's a double test, you need to go long on double test, because is showing you that I don't want to go down below this level, which is 144. So I don't want to go down. I got bought here, and they came in and bought me again. So this 100% telling you wants to go up. And see, this is what happened to Caterpillar. So we were long, we exited on this doji candle, because the move looks tiring. So we said, okay, we need to exit. So when after this move, when this kind of candle forms, it's kind of tiring move. Stock is telling you, I'm getting tired now. So the buyers are not there. So if the buyers come back, you get in. You see this 150-day moving average is just sitting there at 157.80. Intel. So we went long on Intel. Same philosophy. Right here, the support line. And I said, okay, so what is the chances of Intel going up or going down? So the chances are it wants to go up. If it breaks this, it will definitely go up. So I put some money here at this level and send the alert to buy always. So do that, and it broke, and we took the profit. I don't trade Intel often, because it doesn't move. Still, we made money in Intel. Win. So when we got in here at this level, 160 long, we traded this move, made money. Then Win crashed on Steve Win news allegations. Then so 160 was the support, and there was a chart posted by one of my member, Kevin, in the Facebook group. Showed the support area of 160. So I was watching this day 160 support, and this day when the stock started surging, I bought calls and sent alert, okay, buy calls, and we exited right here at the gap. So the news came, see, even the Win came down, but it did not break this level. And then from here, gapped up. So this was the exit. So perfect and exit. So this is where we have to learn about exit also. Entry is easier, exit is difficult. So so exited here. Then when it came down, so this day when it broke 50-day, we bought puts, and we made intraday money on puts. So same day we bought Netflix. And the thing is, this day market was going down, so market was bearish also. So when the market was bearish, I said, okay, let me see which stock we can buy puts intraday and make money. So Netflix and Win, and same day we sold. Win hit this support. So now, and we knew, okay, so if you are going short intraday, you have to know that the buyers can come in again at this level, right? Because they are holding 160. So 160 is a strong support. If it breaks, then it will come to 200-day moving possible of 200-day moving average, which is 145. So their buyers are defending 160 level, and if they are unable to break, then it comes down here. So, and this is again support zone. So when there's a support zone, you have to take your profit quick on your shorts, on your puts. So that's what we did. And Win since then is tested again. You see this here, 160, again tested. So 160 is the strong support now. So you know it touched twice. So, and this is another one, boom, boom, these tiny candles, all these 160, 160, 160, 160, 161, 160. So 160 is the strong support. So now Win is poking its nose to break above this 165 level. So once it breaks 165 level, it especially 169, this 50-day moving average, it will accelerate. So if it accelerates, back up. So once it goes back up, then you know 180. This is where the buyers are sitting because they bought it here. Somebody bought it here. That's why the candle is formed. So these guys, they will say, "Damn, I'm lucky. I'm getting out." So they bought at 180. They saw 160 20-point haircut. They will try to get out. You will see some hesitation here, and then if it breaks, then the sellers are just those who shorted. They will lose hope. They will say, okay, no more. So they try to short more and more, but they fail. So then they will join the bandwagon and go long. So Win will go up. So Win is just dwindling right now. Facing the buyers are testing this resistance. So buyers are testing right now, like scouting. The scouting party is out there. As soon as somebody breaks 166, 167, it will just accelerate upward. Oracle, so I send the alert on Oracle on this based on the candle in my end of day service to buy shares or whatever they want to do with Oracle based on this hammer also. See, again, you see this hammer. So a lot of hammers were formed intraday when the market bottomed. So all those stocks were the one you need to buy. So hammer formed, Oracle wants to go up to buy Oracle, and it did this. So it went up for the 2 days. So Oracle made money. Apple, so Apple on this day, Apple our recent trade in Apple made too much money. One member, again, Kevin, he bought, I think, short-term trade, and he made 1,000%, whereas we made like $400-500 per contract on the recent trades on Apple. You see this Apple intraday formed again the same when the market bottomed. Apple gave us the clue that it wants to go up, strong hammer, and since then it has been flying. Apple is going up, you see. So this hammer formed and Apple flew. So Apple may take out this. So Apple is going up. Apple is going up. So again, this hammer. ATVI, again, I saw this chart. I said, okay, let me prepare it. So ATVI is bullish. Again, this is hammer. And after hammer, this is another super bullish candle. So ATVI is going up, and you should keep an eye on it. CVS. So I talked about CVS and Walgreens that we shorted twice and we made good money. I don't know, 50, 60, 70% on CVS puts. So this was our first trade. We exited right here. And then, this was the second trade. So this second trade was made, I showed you. The second trade was made when the high was rejected. When this candle was forming, I said, okay, this high is got rejected. We need to get into puts. So we bought puts and sold somewhere here. That was our target. And based on this candle, 69 exit point. So we made another 100% on puts. Now CVS has reversed to the long side, and Walgreens also. So the stock goes up and goes down. just need to catch the move in between. So this was the exit, CVS. And this is the chart of CVS is going up. You see, after this move down, now CVS is reversed and it's going up. C, Citibank, I prepared the chart on 7th of February. It's going up. I bought some shares, that's it, and I exited. But just based on this candle, that CVS formed support at 72, C, and it's going up. And it did nothing. It's still holding the support if you see 72. So this candle, this is a piercing candle. So it broke. It came down and then it reversed and it closed above the midpoint of this previous bearish candle. So when this happened, it's a bullish, but then it reversed, right? But it did not break this low. So the stop is still here. So if you are long, you are not stopped out on C. The support zone, if you draw this line here, the support zone is right here. So the stopped on. So C, again, C is now going back up. So something to keep an eye. Oh, I missed. Okay. Okay, so C, okay, so I didn't know. I prepared so many charts. There are 100 slides. So I forget what I prepared. Let me go back. Okay, so C, well, this was the candle, I told you, piercing candle. It formed here, right? So this was bullish. So this day, it tried to break 50-day moving average and it did not, right? It's okay. So if you're long, it's okay. But then this bearish candle formed. You should still be okay because you should know when you bought it that this is your stop. So it stopped here. But then the sellers came back in and they tried to break, but it held again right at the dot, right? So you are still okay. So you have to hold your line. You say, okay, I'm still. So 72, 71 was the line. Then next day it gapped up. Okay, then you should say, okay, it gapped up. I mean, I'm getting into safer position. So you bought here, you're now safe. And look what happened. See, I missed the C. Somehow I prepared the chart, 1:25 p.m. So this is the logic of the trade. When you see this candle, piercing candle, you need to go long. Cisco, so we made money on Cisco on earning trade. So I saw this candle. So I said, okay, earning is coming up and this is the earning run up. So I go long on Cisco. So in earning play, we went long on Cisco and we made huge money. Crossing of 50-day moving average, earning coming up in 1 week. So I said, okay, we need to go long. And the chances are Cisco will run up. And the Cisco, that's what Cisco did. You see on 7th February, it went up. 9th of February, it went down, but it's still holding the low of this candle. And boom, 14th of February, this is the move. So Cisco gave you entry here and here, exit. So this was the earning move. And this is the pullback. So Cisco game is over. Now, so in the swing trading, you anticipate the move before it comes and you get in. Or when the move is happening, that's when you get in, and then you get out when other people are buying it and the buyers are just no more, and there are just buyers and sellers, some neutral thing going on. That's where you exit. And when you draw this parallel line from here, it gave you the exit. So if you enter here somewhere, this is your exit. So now you don't care. If you're a long-term investor, you can still hold it. There's no exit. But for swing trader, the exit happened and you're out. JP Morgan, again, based on 6th of February, when the market was, for me, the market bottom on 6th of February. And there were some stocks which were telling us that the market is about to bottom. JPM was one of the stock, and this is again a bullish candle. So it gave us entry, second entry, then pull back, still holding the low, still going up, and here it is. So JPM from here to here. So this is the move. Qualcomm, again, the Qualcomm I prepared 7th of February. This is the resistance zone of Qualcomm. So there's a heavy resistance at 68, 69, 70 level. So the sellers are sitting here. So Qualcomm gave this one bullish entry. This is confirmation. Again, came down, tested it, came back up, testing 50-day moving average, and it broke. So Qualcomm gave entry here and broke the 50-day moving average. Now here's the resistance. We know this is the resistance, 68, 69. Those sellers will come in, so you have to be careful. Take your profit, think about it later, get back in after it breaks 68, 69. Microsoft, again, Microsoft gave entry here. It's going up, 89.90, and here is 92.25. So doji candle, and the move is over. So you see this, when you see this, it tells you, it doesn't tell you the stock is going to come down. It's neutral. So when it's neutral and you have a position, you need to take care of your position. It can happen. So before you regret, anything can happen. And so you need to exit. So you exit and then worry about later. It doesn't mean the stock is going down. It's just telling you the Microsoft is tired right now. It's tired. NVDA puts, we trade NVDA calls and puts and make a lot of money. So this was a doji candle formed right at resistance. I showed you the chart last week, and this is what NVDA did. We bought puts and made money. We sold, we made like 1,500 per contract on NVDA. Bought at 10, sold at 25. And the move was over. Right here, the move is over. So send alert in the morning to take profit. And this was a very bullish candle for NVDA. NVDA wants to go up. Then the earning came and it went up. So I didn't have a position on this. I only had a short position and closed it. Then it went up, went sideways, went up further, 241. Again, this is the resistance line, 250. And here is 250, it touched 250 again. So you see this, it hit the resistance again at 250. So when the stock fails to take out the previous resistance, the chances are that it will come down. So NVIDIA has a higher chance of coming down than going up. So watch on Tuesday what NVIDIA does. Chances are it's going to come down. Twitter, I missed the Twitter. It just kept going up. I'm showing you the chart, and then the earning came, it gapped up. It gapped up to the resistance line right here from here, and it pulled back. So pullback is sitting here, then it went on a consolidation. Now if Twitter breaks this 35 line, then it's going up. So watch this 35 break. This is the X chart I showed you last week. This is where the buyers were coming in. Before it was going down, they were buying X. So this is a solid hammer candle, and after that X just kept going up. You see X. Okay, so after this hammer, you watch this went sideways, right? It's still the buyers came here. You see what X did? Buyer came here, went on sideways, tiny candle again, hammer. X kept going, it blew up the resistance. So this alert was sent to end of day service. I didn't send to swing. I regret now. So X broke the resistance. Now it's sitting on top. So maybe it consolidated here and then it runs up. So ideally you need to look for the pullback after this run up, because this is very risky run up. You think about this, that they bought here. So they bought here, they bought all the way here. On the sideway, they even bought here. All these guys bought, right? They bought at 31, and they don't mind selling at 40. Whereas if you bought at 45, you will feel the pain. So you have to be careful on timing the entry on a pullback. So the pullback ideally is at 41, 42 level here. So at 41 level, if X pull back, then you look for entry. So move down here, then move like this, down here, up. MU, so MU is a strong support. I showed you the chart last Sunday at 40, has a support, and this hammer told us that it wants to go up. It broke the 40 support, but intraday, and then it closed above 40. So it proves that 40, MU wants to go up. It was trapped in this congestion zone. So trapped in congestion zone, trying to break, you see, trying to break here, and it broke. So MU broke the resistance finally, and it's going up. So watch for MU. We gave on this 9th of February when the market bottomed, you see we gave this hammer candle. So when the market is bottoming, giving you the clue that bottoming, and some stocks are giving you the clue that bottoming, those are the stocks you need to buy. So we gave the bottom clue, so we went long, and you see after that we kept going up. Okay, stock charts are done. And now I'll show you the charts of Dow Jones and other indexes. So last time I showed you this hammer. This was the hammer formed, and all other three indices, the hammer was formed. Some were formed at 200-day moving average. That was a clue that the market has bottomed and an intraday reversal. So since then, this is what the market has done. So right now, the Dow Jones is sitting between 50-day and 200-day, 20-day moving average, 50-day and 20-day moving average. So once it crosses, there was some profit taking on Friday, long weekend. So after that, you see this resistance 25,440. When it crosses, it's going up. So market is going up, not going down. It's sitting between 20-day and 50. Same thing for SPX. Nasdaq broke 20-day, is sitting at pullback. So this pullback doesn't mean okay, the move is over, like you read on the blog. Okay, so it's time for the market to go south. No, who's telling you market is time for the market to go south? So just a pullback. So it's just resting. So the Friday was the resting day. So here the market is aiming for new high. Russell, again, same hammer below 200-day moving average, then close above, and it's sitting at 50-day, 20-day moving average. Once it crosses, it's going up. So market is in the up move now. Once again, I have a $17 trial. If you want, send me email, and I'll send you the PayPal link. And I have a 6-month coaching program starting, and you're welcome to explore what it is about. Just send me email. And I'll see you next week. And your tacos are ready, Marcelo? Okay. Let me see if there's any questions. I didn't read the question. Okay, so mother. Profit. I'm just curious how this stuff works and how sustainable this is. After all, it must be a matter of time before everyone catches up. Yeah, this thing is going on since 1700. So this is not secret what I'm showing you, Madan. So 1700, okay. So now it's 21. What is our not 21? We are in year 2018. So 400 years, Madan. So it's not something secret. Everybody knows, but you need people know, but they don't know how to use it. So I teach you in 6-month coaching program. You can join. And tacos are ready. Yeah. All right. So Indonesia, will you be sending out information to Indonesia? No, I'm not going to Indonesia. I'm going to Taiwan. Not Taiwan. Go to Taiwan also. I rented a car and I drove around the Taiwan from one end to the other end, like a Pattaya and other places. I'm going there sometime in the first week of May. I'm teaching there for 3 days, and I'm teaching one day in Bangkok, and for 3 days I'm teaching in Pattaya. So I showed you the video. It's just a trailer. You can even meet. There's another big group I'm organizing, and we will even meet. I'm planning to meet the ex-prime minister of Thailand and some other people. So that's another. But I'm teaching in Pattaya for 3 days. So my Thai client, I have a lot of Thai land, a big group from there. So I'm going there in first week of May. So if you are there, you are welcome to join 3 days. There's a fee for that. Sean, I will send you the course information, 6-month course information, etc. I'm not coming to Calgary, Canada. I go to Toronto. My family lives there. So anyway, the thing is over. There's no more question. So if you have any question, please send me an email. I respond. Tomorrow is holiday. I'll be working something, and that's it. Thank you for coming. Bye.